So if you're a commercial real estate investor and you would like to get more off-market deals from other brokers in the industry, this is the video for you. So if you don't already know me, my name is Armand Violi. I'm a commercial real estate broker who's done over $100 million worth of successfully closed transactions in less than 3 years. And I'm creating a new video series on my channel to talk about myths in the industry, teach you guys more about commercial real estate, and really start to shift my content towards that direction. I thought a really good first video is going to be how you can get more off-market deals from brokers and kind of dispel some myths around that. So the very first thing is a lot of commercial real estate brokers do deals off market, and you hear about really good buyers in the space, and it's always a thing where they tell you, oh, go create a relationship with the brokers so that way they send you deals for you to buy. And I'm here to tell you that that is pretty much bullshit. Let me explain. So me as a broker, I get paid on commissions, which means I want to go to the buyer who has the highest likelihood to actually close a deal. Now, the buyer with the actual highest likelihood to close a deal is going to be the one who has the most lending relationships, the most similar property types in the area, or the most well-funded buyers. If you're watching this video, one that probably is not you, you might not understand how to actually, not you. And what you probably don't get is that no matter how good of a relationship you build with the broker, they are not going to risk losing a 70, 80, 100, 120K commission check for your little relationship that you guys built with them. Now there is a way to do it. So for example, I do know really big buyers that will basically take brokers on big vacations and spend actual money on them so they ensure they get sent deals first. But if you're just like your typical commercial real estate buyer, you own a few deals here or there, or you're a residential guy trying to get in commercial real estate, broker relationships really is an ineffective approach. Unless you could underwrite and actually start to pay top of market value. So the reason why a deal is ever off market is really for brokers. Really, the seller does not want to list this property. So the way that I'm like, okay, this seller doesn't want to list this property. I'm going to get this deal done off market by going directly to my best buyers and saying, hey, if he's not willing to pay me a fee, can you pay me in exchange for this potential deal? And I'll give him some loose financials and be like, oh, this is right in my wheelhouse. The first buyers I'm going to are the ones who own properties around it that are actual players in the space, mainly because they have the highest likelihood of closing. So if I'm in a competitive atmosphere and I'm not locked into my commission check, I'm making sure that I'm going to the buyer that is likely going to close the deal so I can get paid. Now, between those guys that are the biggest players in the industry for whatever asset class you do, or the biggest player in that area, yes, they can help build a relationship, so I go to them first, and maybe I just like this guy more than the other. But really, if you're just a random buyer in the commercial real estate space, no matter what asset class, and you build that relationship with some broker, and unless there's some specific quantifiable reason why he should be sending you deals first, that building a relationship with brokers thing is complete horseshit, and it's not actually going to get you deals. Now, let's talk about how you can get deals. Now, or if you're going to talk to brokers, what is the best way to make sure they actually take you serious and send you off-market opportunities? Maybe not very first, but relatively first or close to it. The number one thing you guys want to do is have all of your ducks in a line and clearly define why you should send this deal, why I should send this deal type to you first. Let me explain. If you're saying, oh, I will look at any property in this state better than a 10 cap, every buyer on planet Earth would look at that deal, any deal in that state better than it. Like if you find a deal, if you find a, let's say, office building or multifamily, if you find a multifamily building at a 12 cap in the major city, just give me a call. It's like, why would I ever go to you first, who has minimal experience, or as far as I know, minimal experience, less likelihood to close than someone who owns a bunch of properties nearby? Now, if you told me, hey, listen, I could get the most aggressive on properties in this exact county if they're really good for getting me cash on cash returns day one, I'm not really too worried about an exit. Like if you define clearly what you're trying to buy and what the type of asset and what the specifics are to it, then I will think, okay, it makes sense to go to you because that's what you can get aggressive on and you'll move quick on it. If I'm going to you as an off-market deal, you need the ability to go quick, which means you need to know who your lender is, how you like to underwrite the deals, who your capital is coming from, or if you have capital ready to go. You need to give me actual quantifiable reasons that's going to help me get my commission check, aka make my living, and also make you or get you a deal. So like just building this random relationship with brokers is not a way to get deals. The other thing too is brokers lie. So most brokers I know, I tend to not do this, but sometimes you have to just play the game. But most brokers I know, they will tell you all you want, like, hey, I'm just sending this to you first, or I'll wait before I send it out to other buyers. Unless you're like some player in the space, or they just aren't a good broker without a good buyers list, they're not actually only talking to you about a deal, because they're trying to just cover their ass and make sure they get their commission check, because they're not locked in with an exclusive listing agreement, hence why they're doing it off market. The big off market transactions you guys hear about that brokers do off market, that are like the really desirable properties in major MSAs, that is like those brokers, me particularly, there's a few buyer groups that I do this for. I specifically cold call properties surrounding theirs to find them a deal, because they own properties around it, and I know that they could pull the trigger on anything at this price per pad, and they can almost ignore the financials if it plugs into their portfolio. So when you hear, oh, these guys are getting deals from brokers off market, it's not because, oh, we have some amazing relationship with them and we want to just give them all these deals because they're just so nice to us or they're so cool to us. The reason why we're doing that is because they have the highest likelihood to close the deal. Therefore, rather than me do a whole listing and have to potentially lose the deal along that whole process of listing, trying to get the listing, I can just go to them direct, and they're already the top of market payers, and boom. And then if they get a discount at it, cool. But a lot of the times they're paying top of market anyways, which is why I go to them and just get it done off market, because I know that they'll pay the price, rather than you, if you're like not a experienced or player in the space and you just own a few deals here and there, my likelihood of closing that deal is low. So I wouldn't go to you off market unless you define exactly, this is what I can move quick on. I could compensate you more. I could pay you so that way you could double end the fee. I could pay you a buyer's fee aside from what the seller's willing to pay you. If you get me this type of deal with this type of profile and this type of area, like if you really define it for me, I know like, hey, who's like the go-to guy for this? Oh, that's the go-to guy for a deal that of this, and this. Like if I was to talk about mobile home park terms, if any of you guys are into like the manufactured housing industry, it's like if someone's like, I will buy heavy park on homes on lagoons, but I need it in a major MSA. Now it's like, I'll be sitting there, fuck, who's the guy that's gonna take on a really crappy lagoon deal? There's like a lot of junky park on homes. Oh, let me call this guy first, because you defined to me this is exactly what you specialize in. Or maybe there's someone that I know, hey, in this town, if it's on this side of the town, I'm telling you, I'm your guy for it. I'll remember that to go to you off market. So that's kind of a first thing with the off market. Another thing that I want to talk about is now what to say when you're getting sent off market deals. So part of the off market ecosystem is me and you are on the same team, me and you as the buyer, and we're trying to reason with this seller. So if I tell you a price, and I'm like, and I dealt with this today actually. So there's a deal that's worth maybe $4.3 to $4.6 million. Okay, it's a 60 unit park in outside New York City. The seller's asking for 5.2. He said, hey, I'll give you an opportunity to bring a buyer to this. I'm willing to pay you, I'm willing to pay you 2% or 2.5% on this. I need you to get me 5.2. I told him straight out, the deal's only worth 4.7 at the high. But I'm gonna go around and show it, and I sent out email blasts to a lot of my off-market buyers. This is probably like 50 key guys I really do business with. And when I sent it, I got like one guy who responded with all this derogatory stuff and then just said, it's definitely not worth what you're asking. And I'm just sitting there like, do you not want me to send you the first off-market opportunity? Like, I'm letting you know, here's where the seller's at. I literally put in the email, the seller wants 5.2. I think you should submit any offer north of 4 million because it's not worth that, and I know that. But the way you are first to a deal and you don't have to deal with competition when it goes on market later on is by dealing with the seller that's difficult at first, because once people deal with the seller and they lower his expectations, that's when he realizes he needs to list the property, and by then it either gets listed or it gets shopped around by 5 other brokers that all beat his expectations down. So you want to deal with the unrealistic seller that does not want to get you a deal, because that means you are the first one in line if he's still unrealistic a lot of the time. This is a very nuanced thing. But in this case, so I send the guy an email with this deal and he's basically arguing the value with me, and it's like, hold on now, this is my off-market deal relationship. I'm trying to get you a deal and I'm presenting it to you first before I go public with this. I'm on the same team as you. I know it's worth 4.5. If I could get you the deal for 3.5 and close the deal, I get my commission check. I don't care what the price is. But the fact his initial response was to argue with me, not even argue, he just responded like I'm the bad guy telling him 5.2. It's like, do you not want this deal? So if a broker's sending you a deal that is unrealistic, but you're genuinely interested in the property and you can name why you're interested, like really think, why are you interested in this property, or are you just flirting around to see if you can get a deal? Because trust me, you're not going to just flirt around and get a deal. Then ask the broker, I'm only penciling it to this. Can you explain to me where's the seller's heads at? Where do you think this ultimately trades? If I'm starting here, do you think there's a way we could work it out? What about potential seller financing, things like that? So I do have an example of this too, guys. So on my screen here, and I don't want to expose my phone, my Text Blast phone number, and then his info's over here on the right side of the screen, but you can't see it because I have it kind of tailed off, so I don't. Okay. So this is an example. All right, I'm going to show you what not to do if a broker sends you a deal. Even if you're pissed off about the pricing, don't do this. Okay, and I know this guy, we talked and stuff, so it was kind of cool. Anyways, I tell him something, I send him a deal, and it's at a 7 cap. And he's like, we lose money due to rates being 8 to 10%. I say, you're welcome to offer whatever price you see fit. And I'm like, it would have to be at least 10% cap rate, ignore the price. Alternatively, if they're doing seller financing, we could do offer more. And I say, appreciate the response. Won't be competitive. I have current offers from qualified buyers north of 3 million. Interesting. I'd jump on those. Actually, this is, so let me go back to, okay, this is the better one. Here we go. This is what I meant by the response. Sorry guys, that was another example, but he was a little more favorable on that one because he's not, here he's like, we're only doing seller financing. Let me know if the sellers are open. Banks aren't lending on parks. That's his initial response. Banks are lending on parks. Your bank isn't lending on you to parks. So for you to make that statement and just assume, oh, what I sent you is overpriced, there's no way it trades. It's almost like he's arguing with me, and I'm like, I'm the guy who's bringing you a deal. Why are you arguing with me? So like, this is what turns brokers off from working with you. And I'm like, I have mortgage brokers that can get you financing, a very natural thing. Also, seller look at seller finance offer, you're close to asking price. We have money and lenders, we're just not using either, and I've been successful. So many hiccups with banks, I got a few other times. So it's like a sarcastic response, and I'm like, dude, like, I'm not the one telling you, I'm not the one who wants this price. That's what the seller wants. So like, just ask me like, hey, what does it take to get it done? And instead of saying banks aren't lending on parks, say, hey, I'm gonna have problems getting lending on this deal at the price. What do I have to do to make it work? I think I'm in around this price. Because then it's like, we're collaborating. I'm not here to argue with you. I don't care. I want to get the deal done too. If I can make the seller 30% less than it takes, but I make sure I close the deal, like, I'm happy with that because that's how I make my money. Now, obviously in this one it's listed, so I'm trying to actually get the seller above, so I am pretty high on price on this one. And we actually end up going under contract way above what we're under contract right now, way above what the actual financial department substantiates, but it's because I went to a go-to buyer who owns surrounding properties of the same quality and type right next door. So he paid a price per unit, ignored the financials because his lender will do it, which is why I would always go to the best, most actual quality buyer. So price too steep, 7.5 cap rate. Parks aren't even selling at 10 caps right now. I have literally multiple parks this year, well below 10 caps. I closed one at a 6.5. This exact deal he's talking about, I literally am under contract at, I believe, like a 5 cap. Now it's a smaller deal, the guy can take it down cash. There's a lot of finicky things with the financials, mobile home park guys. It's all park on home income, so when you look at lot rent income, it makes no sense. It's a super low cap rate, like a 5 cap. But my point is, why is he making statements like this like I'm the one arguing? Like I've literally sent him a deal and I'm offering to draft an LOI for him, and like I'm like, do you want to submit an offer? Like, start low. I'm on the same page. Like, start low so I could go back to the seller and we could see if we could work something out. But instead he's almost like arguing me, being like, parks aren't even selling at 10 caps right now. So like then I'm telling him like, well, first of all, it's below a 10 cap, or it's close to a 10 cap at least. And I'm like, all right, just like, if you're not interested, appreciate the response. So like, just to show you guys an example, like that's how not to respond if you're trying to build a relationship with a broker. If the guy sends you a deal, be appreciative. And I'm not trying to be like, oh, all high and mighty, like, be appreciative, I'm sending you a deal. But it's like, if I'm going to spend the time to try and send you something that you're not willing to go cold call yourself, or have your own acquisition team, because honestly, being a broker, like, I could full-time pay for thousands of dollars of research tools, text blast, email blast, marketing, all these things. By the way, if you guys want to learn more about how to find off-market deals, I do have a course, a free guide, and a free webinar. I'll put the descriptions in my bio. But like, yeah, okay, you as a buyer, probably you can't do all these different things to try and source deals direct to seller. So you want to go through brokers, but if you're going to go through the broker and I spend all this money to try and find this deal and then I bring it to you and then you just like argue with me on price, like, I'm not trying to argue with you, I'm on the same page as you. I agree. Yeah, I'd like to buy a park at a 10 cap too. but my seller wants a 7 cap. The truth of the matter is probably going to be somewhere around an 8-9 cap. So that's where it falls. Another thing, guys, this is for the newer guys. Right now, as of November 13th, the 5-year and treasury rate or 10-year, I'm going to show you guys how to estimate what cap rates someone could realistically pay for your property. This is going to be an interesting thing. I'm surprised how many people don't know this, but you could usually assume the bank interest rate that you're going to get is usually around 300 to 350 basis points over the 5-year treasury rate. So right now as of November 13th, we're at 4.675%. You could probably assume you're going to get at least 7.675% for your interest rate or wherever it falls by the time you're actually closing, going under contract, because that spread is the profit the bank makes. Now, that's the rate that you'll get for the interest rate from the bank for lending. Typically, if you're a good buyer. If you're not a good buyer with minimal experience, they always add an extra 200 basis points on top of that, so or 150 basis. So you might only be getting debt at 9%, but this really good buyer is still getting debt at 7.5%. Therefore, I'm going to bring this off-market deal to him first because he's talked to me about it. So now when you look at the cap rates, just the spitball numbers, this is a loose rule. Okay, what are properties trading for? A nice property with some upside, but relatively stabilized, just a decent property, right? Okay, I'm gonna take the 5-year treasury rate. I'm gonna add my 300 basis points on top. Okay, interest rates are probably around 7.7%, 7.7. 7.7%, that means I always do like this rule of thumb. The park needs to trade, if I'm just looking at BS numbers online, the park needs to trade anywhere from 0.5%, 50 basis points to 150 basis points above what the interest rate you'll get from the bank. The reason being, if you have to cover your debt service with the income of the park, the net income of the park, the net income of the park likely needs to be higher than your interest rate, slightly, 1.25x, 1.25 the interest rate. In theory, yeah, principal, whatever, you can move the numbers around. There's ways to work financing. I'm gonna make more videos, guys. Every single day I do plan on posting. But if you're ever wondering, okay, I'm looking at real estate deals, what cap rate should I be realistically expecting? 400 basis points over the 5-year treasury rate is a safe place to assume. So right now, if something's an 8.5 cap, that's probably where it's trading. That's a decent deal. I'm still selling parks significantly below that, and I know people are like, how do you get it financed? Someone who has a big portfolio, this is the roll-up strategy and why big groups usually can buy up more things. If you are buying a park, whatever the cash flow is, you're buying a park, whatever cash flow, I'm assuming I'm going to improve the park and exit it at an 8 cap one day. In theory, that's what you're planning for. You're on your IRR, you're like, I'm going to exit it at an 8 cap. I'm buying 50 unit properties. The thing is, the guy who has 20 50-unit properties and is buying that one, he's not selling that 50-unit property at the cap rate of 50-unit property trades for. He's rolling them up in a big portfolio, and now instead of selling it at an 8 cap later on, he's selling at a 6 cap later on, which means he can afford to overpay now, because by rolling it up and you're selling it as a portfolio, similar to how business roll-ups, you could sell at a greater multiplier. Real estate, we just use cap rates instead of EBITDA multipliers, but you could sell now at a lower cap rate, greater sale price, because you're rolling up things into a massive portfolio for a bigger fund or a public REIT to buy, or a larger private equity group, rather than just being like a one-off buyer who needs to make his returns on that one single property, who's trying to hit a home run like a lot of you guys are. They're like, okay, we are trying to amass a lot of risk averse assets so we could package it together and sell it to a big fund that raises money from like a pension fund, or raises money from like a foreign national, or does things like that, or raises public money. So that's kind of the difference. But anyways, to conclude this, if you guys are trying to find more off-market deals in any commercial real estate asset class, I would not rely on brokers as your main deal source. I also would not rely on market properties, because they're being shopped around. And the whole thing about getting into commercial real estate is you're trying to find the best deal for yourself. And to find the best deal means you're trying to become first in line and not be shopped around and bid it up through public competition. So if you guys wanted to learn how to find off-market deals, I'm gonna make videos on that. But in my bio, I have a 100% free guide download. It's called my Ultimate guide to sourcing off-market commercial real estate deals. And in there, I put the actual step-by-step process of all of the tools that I use, every single thing that I do, the cold call, find property owners, set up my database. What do I say on the cold call? How do I send my marketing blast? How do I negotiate off-market deals? All of that literally step-by-step in 36-page PDF for completely free. Link is in my bio. I also have a free webinar that I do. It's about 45 minutes to an hour long. I do it live 3 times a day, sometimes more. That link will be in the bio. And then if you guys want to join my premium paid course and community, I also have like a coaching program and things like that. Link is in the bio as well if you want to learn more about that. Going to be doing these real estate videos at least, I don't know, at least 5 days a week. I'm thinking maybe 4 days, and then I'll do a vlog because I know some of you guys know me from the vlogs and I think those are fun. They're just a total pain in the ass to edit. So I will see you guys in the next video. I don't have a set time, but I'm shooting to do these every single day and start giving you guys the exact things about commercial real estate and how the industry actually works. That being said, thank you guys for watching CREDealaccelerator.com.